Today, we're breaking down JAAA, the Janus Henderson AAA CLO ETF, an income-focused ETF that gives investors access to a part of the fixed income market most people never touch. If you've been looking for higher income potential without jumping straight into junk bonds or taking on equity-style volatility, this is one ETF worth understanding properly. JAAA seeks to provide current income by investing in investment-grade floating-rate collateralized loan obligations, also known as CLOs, and it does so through active management rather than a passive rules-based approach. To understand JAAA, you first need to understand what CLOs are. A CLO is a security backed by a diversified portfolio of corporate loans, typically loans made to large, established companies. These loans are bundled together and structured into layers called tranches, each with a different level of risk and return. JAAA invests only in the highest quality slice of that structure, AA-rated tranches, which sit at the very top of the capital stack. These tranches get paid first and have historically experienced extremely low default rates, even during periods of market stress, which is a key distinction versus equity CLO funds or lower-rated CLO ETFs. One of the biggest advantages of JAAA is that it provides access to a hard-to-reach segment of the fixed income market. CLOs are complex, often illiquid, and generally reserved for institutional investors. JAAA wraps this exposure into a liquid, transparent ETF that trades on an exchange. Another important feature is that the CLOs in JAAA are floating rate, meaning their income adjusts as short-term interest rates change. In higher rate environments, this can support higher income while also helping reduce interest rate sensitivity compared to traditional fixed-rate bond funds. Management is a major part of the JAAA story. The ETF is actively managed by Janus Henderson, and that matters because CLO quality varies significantly based on the underlying loans, the CLO manager, and deal structure. All securities must be AAA rated at the time of purchase, and if a rating is downgraded later, the portfolio managers decide whether it still makes sense to hold the position. The fund holds CLOs across various maturities and focuses primarily on US dollar-denominated securities, but it can allocate up to 30% of the portfolio to foreign currency CLOs for added flexibility. Risk controls are built directly into the portfolio construction. Exposure to any single CLO is capped at 5%. And exposure to CLOs managed by any one manager is capped at 15%, which helps limit concentration risk. While AAA-rated CLO tranches are among the safest parts of the structured credit market, it's still important to understand that this ETF is tied to corporate credit conditions and can experience periods of reduced liquidity, particularly during market stress. This is not a cash substitute, but rather an income-oriented fixed income allocation. The bottom line is that JAAA offers investors institutional-style exposure to AAA-rated CLOs, floating-rate income, and professional active management, all within an ETF structure. For income-focused investors looking to diversify beyond traditional bond funds and money markets, JAAA can play a meaningful role when used appropriately within a broader portfolio. If this breakdown helped, make sure to like and subscribe to the ETF Investor and drop a comment below letting me know whether CLO ETFs are something you're considering or still researching.